So welcome back guys to another video. Okay, so in this video we'll be discussing about a trade which happened on Monday 20th July 2025. It's like last week of the month, like only 3 days to go. So, basically I just want you to have a look at daily chart what it is doing. So we had a daily fair value gap which was formed yesterday. I will come to that. Before that, we will discuss about the trade that happened on extra day. Okay, then we'll move to it. Okay. This was not needed. Okay, so you can say it's a clear downtrend, and in a week they just say we came to this weekly fair value gap, respected that weekly fair value gap, and on a monthly basis we have this monthly fair value gap. So my target to the downside could be either to this monthly fair value gap or either to this monthly order. Okay, okay. Just both are still valid. Okay, and if you just look at the distance or the displacement, uh, this is actually the midpoint. So anyway, this could also be considered. Okay, that midpoint could also be, or the equilibrium could be considered. Okay, so for the time being, I am kind of bearish on GBPUSD till here. Okay, so going to the 4 hour time frame, I think daily there is basically nothing. Daily there is a fair value gap formed today with respect to last 3 days. Okay. So going to 4 hour chart, we had that is a structure shift to the downside. We had this 4 hour fair value gap which was mitigated extra day and kind of respected extra day. Okay. So while I was extra day I was uh, what trading, I used to focus on these relative weaker levels. Okay. So these levels, and this was a low that was I'm not concerned. Okay. This is the law that I was really concerned about. Okay. So, okay, let me remove it. Yeah. And going to a smaller time frame, that 4 hour, just make a note of it. Okay, or I will just, that's a 4 hour. Okay. Uh, Price into this 4 hour fair value gap. In 1 hour, you can see it created a structure shift to the downside. Taking the displacement from this high without this low. You can see the golden zones are respected. Before the going to further, let's go to a 15-minute time frame. So let's check what we have above this equilibrium. Let's say you don't have access to these golden zones and how not to use it. Okay. So we have this 15-minute fair value gap up here. What is below the 15-minute fair value gap? That's there, right there is your 15-minute fair value gap. And what else? What else you're saying? Just pause for a moment and just what you say. Think of what you're saying. Okay. Okay. Anyway, I don't know if pause or not, but I don't want to waste my time. Okay. Not the timing. Okay. That's 3:50. That's the 1:40. Almost from this 2 o'clock till 7 o'clock something. The New York London section like closes. Okay. So this was a London high, highest high. Sorry, this was the highest high on London, and this is the relative equal high with respect to London high. Okay. So when these, I was really concerned about these two highs. Okay, because this London highs and London lows have a significant. What do you say? Uh, Significant value. So when price came, took out these structures and made a structure shift to the upside respecting this 15-minute fair value gap. Everybody thinks, yeah, it's gonna go up about the structure shift, but they are not concerned about what happened left to that thing. Okay, so this 15-minute fair value gap comes in between our golden zones and which is above the equilibrium, and we have one confirmation. Second, this 15-minute fair value gap. This 15-minute order block took out this high, low, high, higher high, lower low. This 15-minute fair value gap, and we have a low. Okay, so 7 o'clock starts here. Went up a little higher, went down, take out these London lows. Took out this. Oh, sorry, this is okay. So I took out this London flow. That's actually a liquidity sweep. So the lowest low after 7:30 will be this one. Okay, so I will just go to 1 minute just and I will show you. The lowest low. Okay, I think 7 o'clock starts somewhere here. Yeah, here it starts. Went up a little higher. Went down. Took out these vehicle lows. That's they are London lows. Okay, so and created a structure shift to the upside. If you want to go up. Okay. There you had a 50-minute fair value gap. It's kind of respected, but moreover, I want you to have a focus up here. Okay, so I'm just removing this 50-minute and this. Yeah. So this was at London highs. Okay, London high and the high that I mentioned right there. Okay, this high and this high. Okay. Yeah, this relative wicket highs, and you had these equal highs. You can see here. Just look at my pointer where it is pointing to. Okay. So when all these highs were took, and there is one more extra confirmation. Okay, so when price after 8:30, price took a short time high here and created a sharp issue to the downside. Anybody who would have went long on these fair value gaps would have placed their stops here. Okay, and I just want you to know what the significance of this high. Okay, here is your 8:30 prior to 8:30. That's your lowest low of after the 7 o'clock, and this is your highest high of 7 after 7:30 7 o'clock. Okay, so this high holds a good value, and this low holds a good value. Okay, so and price took out this low. Anybody who would have went short would have placed their stops here. Okay, so the 15-minute fair value gap on I think Asian section that same day. So 8:30 opened here, went down a little bit, again went up. So here I want you to have a closer look what's happening here. Okay. So the 9 o'clock candles, sorry, 9 o'clock candle starts here. Okay. That's the new 4 hour opens. Okay. You might have seen many candles like this to the right of my side. Okay. So 9 o'clock, the new candle starts here, went a little bit lower, created a short time low here, went a little bit up here, again tried to come back. Again, took out this high. That's a pure manipulation to grab the liquidity from this 15-minute fair value gap. So when to the about midpoint of that 15-minute fair value gap, then starts to go down. Okay, so there you had this sweep, and you had this entire 1 minute fair value gap. I'm extending this because I have already ended when this uh, down candle was here. Okay, because there is no need reason for not to enter up here. Okay, I basically entered on this candle or this candle, right? Okay, but for for you, you can see the structure shift on this black candle. Okay, so you can enter on this candle when the price came to this point. Okay, that's fine. So entry is there, and my stop loss. I think this here or here. I think I don't remember where it was. Okay, I put here. Let's be here. Okay, that would be placed here. 1 second, guys. I entered like this. Job loss was around 33, 37, I think, something like that. Yeah, 32, 31 pips. And I aimed for this lower right here. Okay, so that was my highest, or what you can say, that was my POI for uh, this trade. Okay, so there are, it's almost around 10 hour, but I exited before that. Okay, 9 hours, something like that. Okay. So I just want you to have a look at prior to what is happening before it. So you had this order block here, right? So you had this order, which I just marked that order block. Okay. So and it'll be 5 minutes if you see, and this was taken, and this is a 1 minute fair value gap, and you had a created a 15 minute, 5 minute fair value gap up here, and you had a 5 minute inversion fair value gap up here. Okay, so if you have just missed that entry, you can enter here. Okay, somewhere after this 5 minute, this shit was closed. After on this green candle, you can enter. Okay, so that could be another entry. Let's say here. Stop loss could be around here. Okay, one note, 2 pips. Target is 8. That could also give you around 2.5 to hour. That's the two entries that I was primarily focusing on, but I didn't took another entry just because I don't have it. Okay. You had this order block here. Everything was perfect. Okay, I think I'm just removing that because I explained what. Okay, again going to 1 minute chart. This is order block. So anybody, any ICT traders also who have going like whose bias for the day is like bullish, they will look for this what is it order block. Okay, this 1 minute order block. And when price comes about this order block, there is a we have a short time low up here. That short time low was taken out and came to this order block here. Okay, and what they will do is that's a 5 minute fair value gap up here. That doesn't matter. So anybody who would have went long short here would have first placed their stops here because there is too much of liquidity word at this place. Okay. So I didn't move a single inch from my entry. Okay, so I just moved somewhat to this point. Okay, because I didn't tell you. Okay. So this is a pool of liquidity up here. Okay, you can see how many highs were, yeah, short time highs were here. Okay. So I thought the market would come to this 5 minute fair value gap, then go down. Okay, but that didn't happen. So it went to this 1 minute order block, then it started to rally up. Okay, so it took out a low. Okay, structure shift to the upside. This fair value gap is still validated and start to go up higher. Okay, so when price created this high and when it start to move lower, creating a structure shift to the downside again like this, any dumb money who have put their stop loss here would have moved their stop loss to here. Okay, okay, and it got a sweep down here too. Okay, so the next time for the market is to grab all the stop loss that tried to here. Okay, you can see it first it created a liquidity sweep that was I think that was not enough. Again the liquidity sweep, again a liquidity sweep. So the dumb us to go higher, who like the one who want to go higher, what they will do is they will watch you had a structure shift there is a body close up here, right? So I just want you to look at these kinds of dumb these are kinds of dumb body close up. When the body of the candle closed here and the next candle went up a little higher up and closed down below this candle and the previous candle, that is not considered as a good structure shift to the upside. Okay. So what they will do? You got a structure shift. You had a 1 minute fair value up here. You had a order block here. So they will enter here or on this fair value gap or making their stops here. So the market is creating the whole shit liquidity. First it created down here. Next it created down here because this any term who have gone like long position from this fair value gap would have put their stop loss there, right? And any term who have gone long from this fair value gap would have put their stops here, right? So that's what I'm saying. Okay. So when this high was taken and when this high was not taken in GU and but it was taken in EU. Okay, so I will just show you. There's a good trade for you. I'll just tell you just not the time. Okay. This candle size 445 or 1045. Mm, yeah, somewhere here. Yeah, look at this side. This is the high that formed at 1034, I think. Yeah, somewhere here, but this high was not taken. On 1045, it took out the high, creating an asymmetry with respect to GBP. You can see, okay. So the entry that I would have taken here is if I was trading up. You can see this 1 minute fair value gap, which was like what do you say? Doesn't this fair value gap which was not respected. Okay, so I would say I would take an entry on the next candle after I getting closed under this candle. Okay, so and making my stops there. Yeah, you can see this. There is a 5 minute fair value gap up here, and I just want you to one more time. I want to show you. Okay. So that high was taken, right? There is the high I was talking about the stop loss, right? So when this high was taken, and when this 5 minute gap was not respected, so it really closed below it, right? And there is some wick, okay? So it is a perfect closing for a like what is it? 5 minute candle to inverse, okay? I would have taken like this 50 points. It doesn't matter, okay? And I would that my this could be my what you say target. That's the same target. But if you are not comfortable with the perfect entry model for here is I'm just removing this 5 minute fair value gap up here. Okay, perfect entry model for here is let's say this 1 minute fair value gap. This holds a significant value because you had a outlook up here and a fair value gap up there. Okay, so this holds really a good value. Okay, so when this fair value gap was fully inverted, you can like take a trade on here. Okay, making stops around here. Body cross, that's fine because the maxima it should have come is to this inverse volume imbalance. So imbalance of this fair value gap. So above it is safe to place your stop loss. Your target could be this low, around 1 to 7, but sorry, not this low, sorry. Here, okay, almost 3 hour you will get, okay. But if you ask me, this was also not my actual target, okay. I will show you my actual target a little bit. I think you understand the trade which happened from here. Here, the dumb money who have gone long from this position. I think you got an understanding about if you ever miss this trade missing is okay, okay, but the stock the market price action what it is doing here, if you miss that you can't take any trade further, okay. It's okay if it is also down 830, okay, because the proper entry you have missed here, okay, the optimal entry, okay. You have missed from there, so you can't complain it, okay. So from here it was a risky entry, but it was not basically a risky entry. I won't say that. Okay, the 7, 8, the high was taken. Again, that is a high which was taken and went to this 15-minute fair value. I wouldn't say it was a risky, but many won't be comfortable with taking that trades. Okay, so I thought I think you understand everything that I explained here. I'm just removing because I did want to make my chart clean. Okay. So now I am really concerned about I will say. Okay. So my actual target was not this the low after lowest low after 7 o'clock. Okay, my actual target was around. I think I told you at the beginning of the this was the low. This was the low I was really targeting for that is this sell side. Okay, not here this sell side. So let's say if you I didn't I exited that trade and hold up to that trade, I would have get almost around more than 10 hour, I would say. Almost 19.68 hour. Okay, this is why I had hold till here. Again, it's good. But after this is there is no interest for me. Okay. So I think that's all for the day, guys. Hope you had a good day. So currently, what do we have now? We have a uh, daily survey recap up here. So I had a daily fair value gap, and you had that monthly fair value gap up there. Okay. So okay, clear structure shift to the downside. Let's see what happening for the few days because I think there is some weird news happening. Today there is basically no news, but tomorrow I think we have a huge news like federal funds rate, and there is I think day before this GDP is that sorry, I don't know what kind of news are that. Yeah, okay, yeah, and for the executions. I don't know what is this one. Okay, so it was kind of misclick, I think. So in this, okay, sorry. In I was basically trading on MetaTrader. Okay, in MetaTrader, I will show you the entry from here. Okay, I just entered from this 55-minute that IFVG, I think. Yeah, for this 5 minute IF which I entered. Yeah, anyway, but 55 minute IF which I entered due to spread, I didn't get the entry. Okay, so again I entered. When I entered here, this was my stop loss. Okay, sorry, this was my stop loss, and when I entered from here, this was my stop loss, and exited around that allow. Okay, I think somewhere there was allow. That was my exit. So going to MetaTrader, I will show you. It's the six. So entry right from there, making my stops around here. And exited, you can see profit was around $980, and uh, where is the history? Oh, sorry guys, I can't show you the history. Okay, so I think that's all for the video, guys. So have a good week. Uh, like have a good everything. Okay, so thanks for watching my videos. Hope you are getting some idea about what you are doing. Okay, okay guys. So bye. That's we'll end the video here.